Welcome back. You are watching WION The World is One. Thank you for staying with us. There is turmoil in the U.S. Treasury market after a major ruling from the Supreme Court on President Donald Trump's tariffs. In a decision that struck down the president's tariff program, the court left one massive question unanswered: whether businesses are entitled to refunds. That could leave a hole of roughly $170 billion in U.S. finances. And now markets are reacting as investors are trying to figure out what it means for inflation, interest rates, and America's growing deficit. The Supreme Court's takedown of President Donald Trump's tariffs has injected fresh uncertainty to global markets. The ruling did not address refunds on tariff revenue already collected, which is estimated at more than $175 billion so far. The Congressional Budget Office has projected tariffs would bring in about $300 billion annually over the next decade, the revenue that may now be in question. Now, President Trump has rushed to impose replacement tariffs, a temporary 15% levy lasting 150 days, but it's unclear exactly when or on which countries it will apply. Some nations, including Britain and Australia, previously faced 10% tariffs, while several Asian countries were subjected to higher rates. Trump has also issued a warning on social media. He warned countries against trying to, quote, play games, or they would face even higher tariffs than what they already have. For the bond market, the concern is simple. If refunds are required, the government may need to borrow more money. That could mean higher debt issuance and additional pressure on long-term interest rates. The benchmark 10-year Treasury yield recently stood nearly 4.1%, down from peaks above 4.5% in mid-2025. In futures trading Monday, yields hovered around 4.05%. The yield curve has steepened in recent weeks, with short-term rates falling faster than long-term rates, as investors anticipate possible Federal Reserve rate cuts amid cooling inflation. But some analysts warn the bigger deficit picture could reverse that trend. Meanwhile, the dollar is sliding. On Monday, it fell about 0.4% against the euro and is now down nearly 12% since the start of President Trump's second term in early 2025. Investors have piled into so-called safe haven like the Swiss franc and Japanese yen. In the short term, lower replacement tariffs could ease price pressures and help bring inflation down faster. But longer term, analysts say or indicate renewed policy uncertainty and the possibility of bigger deficits could push borrowing costs higher and complicate the Fed's path forward. The president had also floated the idea of sending Americans $2,000 tariff dividend checks, though that proposal now appears unlikely.